Hello traders and welcome to another video review. Today is Friday, March 4th, 2022. Let's take a look at the Forex calendar first. As you can see, for every first Friday of the month is of course the non-farm payrolls Friday NFP Friday, and this one is no exemption. London session is pretty boring. There is nothing here in terms of the any important news release. We got some data from Germany, trade balance, industrial production for France, and gross domestic product of Italy. One interesting thing is construction PMI from the UK, scheduled for release at 10:30, and at 11 there is a retail sales from the Euro zone. The key event of the day, non-farm payrolls together with the unemployment rate, is expected to be released at 2:30 as usual. The unemployment rate is expected to drop from 4% to 3.9%, and non-farm payrolls are expected to decrease from 467,000 to 400,000. More data regarding to the labor market, change in private payrolls, change in manufacturing payrolls, and of course the average hourly earnings. This is everything from the US labor market. We got some other data as well from Canada, building permits and labor productivity, both of them scheduled for release at 2:30, and 4 o'clock PM we got IV Purchasing Managers Index from Canada as well, expected to increase from 50.7 to 54.2. Because of the non-farm payrolls data release, I think we should take a look on every market related to the non-farm payrolls. We are going to start with US dollar index. The US dollar index daily time frame chart is clearly showing us the strength of the bullish camp, as we are making another higher high at the level of 98.05. As you can see, we keep trading inside of this channel. The next target is of course the level of 99 points, then of course 100 points. There is no sign of any kind of trend reversal. The momentum is strong, momentum is positive, 70 points right now, keep going up. So the US dollar should be going up, despite the fact that the market conditions are extremely overbought. It looks like this market is simply trending, so there is no point of turning back right now. Eventually local pullback might happen. So US dollar index keeps going up, which means the SP 500 should be going lower. And as you can see, the recent price action, let me say, of the S&P 500 is showing us a three-wave decline here. So what do we have is corrective decline from the highs of 4,816 points. We have the first wave, wave A, then we got wave B, and then we got the wave C. So this is a clear three-wave decline, which means that decline is not impulsive, which means this decline, because it's not impulsive, it will not start any new trend lower. The decline is big. The decline is in terms of the percentage. Let me just take a look. Let's say we want to take a look how big is this decline. It's 14, almost 15%. So that's a typical correction on the S&P 500 between 15 and 20%. It's like a maximum correction before people, investors, speculators will call it a panic sell. Okay, so right now we got the ABC correction. We bounce. Please notice the big green candle from the level of 4,107. We are testing the trend line here, and if the data will be in favor of the S&P 500 bulls, then of course we should test 4,488. We have the bullish sandwich here into the 4,300 technical support. So the S&P 500 after ABC correction is done, this is a simple correction, might have a chance to extend the gains towards 4,488. S&P 500 is directly connected to the non-farm payrolls, US dollar index. What else will be trading heavily during the non-farm payrolls? Euro dollar. Let's take a look at the daily time frame of the euro dollar. And we can clearly see that the market is trending down as we are still inside of the channel. Let me just point out that US dollar index is going up, euro dollar is going down. This is nothing special. So what do we have here? New low is about to be made towards the 1.10 level, right? So this is the technical support right now for all of the bulls. Those levels here, as I said, 1.1142, sorry, 1.1121, 1.1153 and 1.1167. That was a pretty nice zone for a bounce, and in the zone for the technical support, it was the key long-term support. So euro lost long-term support. Let me just show you, let me just zoom out and show you what do I mean. This level here that you see here was the last technical support, long-term technical support from 2020 for the euro dollar. Now we are testing this level here, that level of 1.1, which last time was seen at 2020, the end of the May. If we break below 1.01, then we can go as low as 1.0738, and this level last been seen in the April 2020. So please notice the fact that this is the COVID sell-off, March 2020. This is the COVID rally, and right now we are very close to the levels of the post-COVID rally. Okay, so it looks like, despite the fact that on the daily time frame chart the market conditions are extremely oversold, this downtrend might continue even lower on the euro dollar if US dollar index will keep going up, if S&P 500 will extend the correction or keeps consolidating or going down for the longer period of time. So we got euro dollar, we got US dollar index, S&P 500. Let's take a look at the daily time frame of gold, which is directly related to the S&P 500 data and NFP, non-farm payrolls data as well. So what do we have here? Let me just zoom out from this macro view. As you can see, we are approaching 1,950 levels again. The local high 1,973 has not been violated yet. Big pin bar here, big upper shadow. However, market is trying to regain this lost ground after the pin bar was made. So right now let me just zoom in and show you the key technical support, of course, 1,877. This zone is not active right now, so we don't have to worry about it that much. Short-term trend line to the upside and three technical targets: 1,958, 1,965, 1,973. Those targets are for bulls in case of a bullish breakout. Market conditions extremely overbought, but it looks like the gold market keeps trending up. So those conditions might stay with us for extended period of time, unless there is a clear and obvious sign of reversal to the downside. Then it might get very dynamic, very aggressive, of course, in terms of the price movement. So gold still above the short-term trend line, close to the recent highs. Local high 1,950, this year's high 1,973, $23 off the highs, of the yearly highs. So pretty much bullish market for me, waiting for the NFP data. So last but not least, let's take a look at Bitcoin. The Bitcoin market has been rejected again from this zone, the red rectangle zone. We know very, very well that this zone is the key zone for the market participants, especially for bulls, and any breakout above this zone is very bullish. What do we have here? We have a free wave advance. So we got, and again, the same situation. Lows are here. This is the wave A, wave B, wave C. Right now, we got only 3 waves here, A, B, C. If the level of 39,877, which is the high of the wave A, is violated, then we have confirmation this was only a corrective rally, and Bitcoin should expect lower price levels. If, however, 39,877 is not violated, then there is still a chance for another rally to the upside, wave, as we call it, wave 5. So please keep an eye on the current situation on the Bitcoin. It looks very, very interesting. The key technical zone, the supply zone, 44,409, 45,811, has not been violated yet. So this is the zone that we should be keep looking at. If it's violated, then we will rally. If not, we will likely go lower for the extended period of time. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.